If you want to take last month and if you take the year-to-year data in 12 months, we did close to 15 billion transactions. If we step back now from where we were to where we are now, I think we have come a really long way. To the extent that today India is actually seen as the world's #1 superpower when it comes to digital payments. Like countries look up to us.
As soon as we think of payments, we think digital, by the way. Used to be predominantly cash-based,
Yes.
non-digital payments. How has the journey been from an operator point of view?
So I think the wallet adoption was the first thing that the country saw. Okay, now I don't need to now carry money. It's kind of there in my digital wallet and I could use it. What has happened in cards is like, see, and if you think about it, cards has been an ecosystem which has been there, right? Yes, today if you say around roughly annually $200 billion payments happens on cards, and that's almost equally split as 110 billion being on credit, 90 billion on debit.
Right disagreement or probably an apprehension I had. Welcome to the show, guys. Today we have one of our special friends who essentially has done a lot of their work in the payment industry. I think when we speak about payments, we generally think about from a user's point of view of how we do payments, but I think there are multiple stakeholders and multiple actors in the entire ecosystem. And he's essentially worked with almost all of them in different capacity during different phases of his life. So I thought no better person to probably call on the show and discuss how the entire payment ecosystem has evolved over time, how the behavior on merchant side has changed, what are the different business models which we used to see have now evolved into something new, and how, say for example, technology will further enhance the entire way we'll transact and thus the payment ecosystem. So welcome to the show, Vijay.
Thanks. Thank you, sir. Happy to be here.
So let me directly get into like a very straightforward question. I think everybody keeps talking about the fact that UPI is really big.
Yeah.
I remember, say even 10 years ago, at not more than that, a lot of people used to crave about IMPS. And in my opinion, UPI is like IMPS was a big technology upgrade which we had. And UPI is nothing but a wrapper on top of the IMPS rails which have been created by NPCI. And now the adoption of of UPI has also gone up.
Yeah.
Obviously, there are multiple actors which have helped. Accessibility of mobile phones, technology, cheap internet, all of that has really helped.
Yeah.
What has your great takeaways been, given that you've spent so much time across different organizations and ecosystems?
Yeah. See, I think if, like you rightly said, if we step back now from where we were to where we are now, I think we have come a really long way. To the extent that today India is actually seen as the world's #1 superpower when it comes to digital payments. Like countries look up to us, and I think that has happened through a combination of things that have come together over a period of time. Whether it is data, whether it is customer adoption, whether it is the mobile phone penetration, whether it is the architecture that was laid out, right? In terms of saying that how can we make almost no cost system work seamlessly with instant payments and with a beautiful customer experience. I think that that magic, which started around 2016-17, has kind of really paved the way for a lot of growth. Yeah,
makes sense. And I think a lot of people also think about payments, and I think we are fortunate to be in an ecosystem in a country where as soon as we think of payments, we think digital, by the way.
Yeah.
Even 10-15 years ago, most of the payments, be it P2P or P2M, used to be predominantly cash-based, non-digital payments. Now we think of almost all kind of payments in a digital form factor.
Yeah.
How has the journey been from an operator point of view? And why I'm asking you this question is, look, I think a lot of people think of, say, a product coming live and people start using it.
Yeah.
For a fact that as an operator, you would have gone through a 0 to 1 development cycle.
Yes.
You would have gone through scale cycle.
Yeah.
And then, it becomes really large. Like UPI is now entering into it.
Correct.
I still remember the days when, UPI was still getting formed. People used to not have an idea of UPI, but people used to be like, instead of sharing account numbers, now we'll be able to push money to your phone numbers.
Yeah.
This used to be like a very initial thought.
Yeah.
Since you were an operator at different stages with different
Yes.
stakeholders,
Yeah.
how has your experience been like, and what have you seen things changing over the last,
Yeah.
say, 10 years?
Yeah, no, absolutely right. So if you even rewind 15, 20 years back, it was all about the cards ecosystem. Right? Like cards was where the only main form of digital payments, like from a shopping experience or something like that's what people could relate to. Then over a period of time, you had modes where people could pay, through their net banking, through IMPS, etc., etc. Right? So the people started realizing that whether it's online or offline, I had these alternate modes. I could let's swipe my card. I could kind of go to a net banking portal, make the payment, etc. I think that realization started happening, say somewhere in 2005ish thereabouts, right? Like it's kind of 2005, 10. Around that time frame, people started thinking that there are these other ways by which one could transact. I think then early 2010s saw the coming of wallets, right? So digital wallets were the first, in some sense, all-pervasive way for people could use their digital payments. And I think thanks to multiple players who got onto the bandwagon, whether it was Paytm or us as Amazon Pay or other wallet providers, who kind of launched their first wallets, prepaid wallets, also came into, and at that time, they became live. So I think the wallet adoption was the first thing that the country saw, right? Like people saw some use cases. In fact, I remember when I was at Zeta, one of the things that we thought was, a closed loop wallet for food is kind of how we kind of came about, right? When we spoke about digital meal vouchers and so on, that was the first closed loop wallet that actually we brought into the market. So wallets were, I think, in some sense, the early harbingers of the digital wave, right? People could realize that, okay, now I don't need to now carry money. It's kind of there in my digital wallet, and I could use it. So depending on the use case, I could use it as at a restaurant or at a parking lot, of a commute, etc. So they were among the early things, and that kind of continued. If you were to think about it, even until 2015 thereabouts, Paytm was heavy in terms of pushing the wallet story to a lot of consumers. Similarly, for us as Amazon, the wallet was the main source where we realized that customers who would do shopping, online shopping, they would kind of want to park their money there. They would we would kind of be able to put the refunds back into the wallet. If someone were to gift another person, the gift could actually be stored in the wallet as a gift card, right? Like, so it's fungible as a currency. So all that started happening, right? And for us, that was one of the biggest drivers, where we said that, hey, if gifting can come on wallets, right? And if e-commerce refunds and cashbacks, everything were to come on wallet, then that kind of starts a flywheel of its own, right? Like, because now there is money coming into the pool.
But look, I think slight disagreement or probably an apprehension I had. I think most e-commerce you started using closed loop wallet, which essentially became a semi-closed closed loop because look, it's not deemed as a financial instrument by RBI,
right?
And thus you could probably use it like a card which you load and use it across a food mall to make payments, similar to that. I think most of the card wallets were utilized by e-commerce players to ensure that the money once transacted is not going out, and it is essentially pushed back into a wallet which can again be utilized to buy something else if they are interested in.
Correct.
But if you do a refund, then you don't know if you can actually capture the GMV which you have captured as part of your entire flow. I think that was a very clever play that way.
Yes.
And obviously gift card is nothing but, say, non-reloadable semi-closed wallet. If I'm correct, by the way.
Yeah. So you're right. So, and that comes down to the use cases, right? Like, so whether you have a e-commerce use case, where the money is coming back into the wallet for reuse, or you have a use case like a digital meal voucher wallet, like the ones like Sodexo, where it's again a semi-closed a certain merchant category of restaurants, where one can use it. And by the way, these were licensed, right? Like, so you had to have a prepaid instrument license.
PPI license, right?
PPI license to be able to issue them, right? Like, so there were governance around, who could issue them, for what purpose, and controls and so on, right? Like, so that was very clear.
No, I remember while you
yeah.
were speaking in early 2010s, much before demonetization happened and like a lot of pickup in terms of
Yeah.
payments happened, much before UPI happened.
Mm.
There was, and I still do not understand, probably you can help me understand it
Yeah.
because as part of Zeta, you said you guys were building for it.
Yes.
And I also remember even the likes of M2B also started like a card processor company
Yeah.
slash, system of records, if I may say.
Yeah.
And a lot of people used to approach banks with a PPI use case. PPI licenses were easier to come by then,
Correct.
at least relatively. Right
Yeah.
now, it's not that. It's not the case.
Yeah.
Why was such a surge in PPI in early 2010s? What was your read, given that you guys were associated? Why was
Yeah.
that happening?
See, the PPI was one of the first places, where people saw that, one could make money in some form, right? Like, for example, a prepaid card, had a certain MDR, which one could associate with it. And by the way, until that time, and which later fintechs figured out, a prepaid card could also be used to load a credit line, right? Which then subsequently got stopped. But prepaid cards could load a credit line as well.
But I thought
Right?
that was a very
uh,
gray area anyway.
Yes, correct. But what I'm saying is it opened up possibilities to monetize, right? I think that is what kind of led to it. Like saying that, and more importantly, right? Like, so banks saw value in the fact that there is money which is sitting up front, right? And they were willing to share a portion of that with their partners, right? Like, because that's
No, that's
upfront
true.
money, there is breakage.
No, that's true. The
Yes.
breakage would still come as part of your
Yeah.
gift cards. I
Yes.
think a lot of people, I remember in those days while I was employed with Yes Bank,
Yeah.
and Yes, of all the banks, I'm not saying others are not, but Yes has always been really aggressive in
Yes.
terms of digital innovation.
Correct.
I'm sure if you recall those days also, like early 2010s,
Yes,
mid
was the to-go
2010s.
partner.
Yes,
Yes.
used to be a very,
Yeah.
very strong bank in terms
Yeah.
of digital adoption.
Correct.
Even when I still remember IMPS days when IMPS was still becoming mainframe or mainstay. Yes Bank was one of the top banks. So, but coming back to this thought,
Yeah.
I think one of the bigger points was if there is somebody who's trying to issue the card
Yes.
as a PPI, which could be in the form of a wallet or predominantly a virtual card or a physical card,
Correct.
PPI, you used to, because of an outcome of MDR, you used to get interchange income.
Correct.
And thus, a lot of people used to be very specific. Will I get a shared bin? Will I get a specific bin? All of those things used to happen.
Yes.
Isn't that true?
Absolutely. And then you had this rev share arrangement with the banks, right? Saying that, okay, for every transaction, I'll make money. And one of the great use cases that we kind of landed on, when I was at Zeta, was this digital meal vouchers. I mean, it was meal vouchers, then we digitized it. It was given every month as part of the compensation, for employees. If you recall it, it's still there. So it's part of the tax law. So that money would come every month preloaded, right? Let's say it was like a pool of money which would come every month for many thousand employees. So, and then it had to be utilized, right? Like so it automatically gave a certain pool which made it very interesting for the banks. And then the moment you crack issuance of these wallets and you allow avenues to spend, then it kind of becomes a.
But did you guys think of it like a closed loop ecosystem or a semi-closed?
Semi-closed loop. So it was initially closed, and then we realized that we have to extend it to semi-closed.
Because you could go to any merchant,
and do it. Like of course we had these checks for the MCC. The category had to be restaurants, and you can't use it for others. We did all those checks, but the moment we opened it, I think it really became a very good business.
It would have been great if you had Zomato and Swiggy at that time.
Yes.
That would have really helped a lot of people.
Correct.
But cool. So look, I think this is a good place to probably start talking about, all the way speaking about PPI cards.
Yeah.
I think one of the things which I think is very, very underspoken about or should be spoken about more is the transaction of how people engage between, say, a person to person or a person to merchant.
Yes.
I think a lot of people who are in banks would understand it very, very easily because it's the lingo they speak in. But I think general people don't understand that whenever you're doing any kind of trade or commerce, there is, as a user, I'm going to a merchant to buy some product or service. Once a transaction is done, it's the receiving of that product and service and then exchange of a payment which is made. Now, we understand that there's a person, there's a merchant. There could also be a person to person relationship which might come up. But there are multiple different actors which play a part in
Correct.
ensuring such a transaction happen.
Yes.
Uh, and transactions can be in two form, in my opinion. One is obviously digital and physical or phygital, if there is a mixture in between.
Yeah.
I would love for you to probably speak about, since you've been part of, say, a company like Zeta,
Yeah.
you've now been now working as, hey, the business merchant business head for Amazon Pay,
Yeah.
which is essentially acting like an aggregator, but also, you know, specifically thinking more from an acquiring bank side.
Correct.
Uh, how has the ecosystem evolved? And if you can just speak about
Yeah.
how the business economics work in this entire life cycle of a transaction in general.
Absolutely, right. And I'll talk about the cards ecosystem first, and then we can come to the UPI ecosystem. There are a lot of
I
parallels.
am happy if you want to speak
Yeah.
about check processing also. I'm just
Sure.
trying to understand everything,
How
not
it,
that.
absolutely,
Huh,
yeah.
please go
right,
ahead.
and let's take a very simple thing which people can relate to, right? Let's say, you know, one is going to a supermarket, one has a bunch of credit cards. So let's say, you know, one, let's say it's a credit card of ABC Bank, right? Like so. You finish your buying of whatever stuff, you go to the counter, and at the counter you presented a bill, and then, you know, you're swiping a card, right? So, and then you swipe a card, you get a receipt, a bill, and then you walk off. Like, but there are so many things which happen in that precise instant, in fact, to be particular. So one, you as a customer, you know, you've been issued a card, which means that you've been found credit worthy. Right, and yeah, you've been issued a card by your bank, right? Like so, the bank has, in some sense, like in principle, decided that, you know, you're worthy of a certain credit limit, you know, every month, based on XYZ checks that they have done, etc., etc. And in this case, the bank which has issued the card to you is called the issuing bank, all right? Like so, that's what, you know, you're carrying the card. Every merchant, so let's say you go to ABC supermarket, right? So the ABC supermarket is a merchant, and every merchant for card processing needs something called an acquiring bank, right? It's the bank with whom the merchant has a relationship with, for the merchant to be able to receive the payments on a continuous basis, and also for the merchant to kind of, you know, usually it's the same bank with which the merchant also has a CASA relationship, but it need not necessarily be so, right? Like, but usually banks kind of try to cover both sides, especially the larger ones, you know, the large acquirers in India are SBI, HDFC, ICICI, and Axis. So they kind of try to typically, you know, when you go to a merchant, it's a relationship. So they say, okay, you give me a CASA account, give me an acquiring side business. And then let's say if you're in the retail business, give me the acquiring, and I can give you better rates, etc., etc. But just coming back to the players, so this acquiring bank relationship is very important for the merchant. Now, why is it important? One, I said, was settlement. Second, the rates are given by the acquiring bank to the merchant, and when I say rates, I mean the MDR, right, which is levied to the merchant, right? With MDR, which expands to merchant discount rate, is a combination of a few things, right, which kind of come into the picture. So there is an interchange which is there for any transaction, which is typically shared by the issuer bank and the card network, and I'll come to card network shortly. And then there is a small additional charge that is levied by the acquiring bank for the services that it kind of provides to the merchant. So there is a small acquiring fee there. All put together is what is called the MDR that is levied to the merchant, right? So the acquiring bank deducts all these charges, settles to the merchant, and in turn it settles to the different players, right? It settles to the issuing bank and to the card network. Now the role of the card network is more like a, you can think of it like a highway, right? Like everything connects to the highway, right? Like so the card networks, whether it is Visa, MasterCard, Discover, Amex, all these are card networks or schemes. The terms are used interchangeably. They are payment systems which help in payments flow amongst various networks, right? Like so they connect, like they're like a web connecting issuing banks and acquiring banks.
They're like a router.
Yeah, absolutely, right? Like perfect, right? That's what they do. So this this whole mechanism of settling to the merchant, making sure that, you know, transactions are kind of processed smoothly, is done by the acquiring bank. Now, the moment a card is swiped, at the same time, right, like the issuing bank also does a couple of things, right? It checks whether this this card, does it still have a limit, right? Is this customer with whom the card, the card bearing customer, like is he still a legitimate customer? There is no default, etc. There are those checks which happen, and there is an instant confirmation which comes from the issuing bank, post which the transaction is processed. And all this happens in a matter of a few milliseconds, right? Like, so that's the speed at
But
which.
tell me one thing. Look,
Yeah.
I understand it, but earlier what used to happen is, and obviously that got sorted really easily,
Yeah.
was as soon as the transaction happens, the debit to your account happens quickly and instantly.
Yeah.
You either get a payment if you're using a debit card that your payment has been deducted, or you get a message from your
Yeah.
bank
Yeah.
that your credit limit has been reduced. When does a merchant get paid?
Yeah.
Has that, because it used to happen generally on a T plus 1 basis, if
Yeah.
it's a continuous
Yes.
batch settlement done by them, or it used to wait until they've settled their batch, because I'm just thinking still from a POS perspective.
Yeah.
Has that evolved to a level where
Yeah.
most transactions get settled with a merchant on a real time basis?
Got it. So for card transactions, the industry is still stuck to T+1. The only thing that has changed over the last few years is that, the merchant who, let's say, has places a request for early settlement, right, which is ahead of either the same day or ahead of the usual time that the bank settles, the bank has been willing to be a lot more flexible in terms of extending lines. So they, in some sense, become de facto credit lines.
But extending lines will still come with a cost. No?
It comes with a cost, but it's the merchant service. The same day settlement ask is also an ask from the merchant.
Yeah, I agree. I
Yes.
agree. Look, essentially, you as a bank, you can still make some money if you're not settling your somebody's money
Correct.
for some time.
Yeah.
And I understand probably that's a aggressive way of giving lower MDRs to your merchants. And if somebody is asking for a real-time payment, probably their MDR requirements will still be higher.
Yeah.
But look, I think offering a line always used to exist. I was just still intrigued to figure out, has the ecosystem evolved to a level where
Yeah.
payments happen instantly?
Got it.
Because while I'll tell you, sorry, just let me
Yeah.
just complete it. Because if a merchant was using two different types of payment modes, where they were accepting payments either as POS, which is where cards are used,
Yeah.
or they were also using, say, a static or a dynamic way of accepting payments via UPI.
Correct.
The UPI payment will hit me directly, instantly.
Yeah.
So as a merchant also, you have incentivized the merchant to push the customer that, sir or ma'am, why don't you use UPI to make a payment to me, because
Yeah.
I'll get my money faster
Yeah.
and the MDR is lower. Is that a fair way of reading it?
So most enterprise merchants, even on UPI today, get at T+1, and because what happens, there is
Okay.
a nodal account in between, right, which the acquirer uses to transfer. So let's say whomsoever the acquirer is, usually the acquirer is a TPAP, which is a third party application provider. It could be anybody, it could be a PhonePe, Paytm, Amazon Pay, whatever, who along with the acquiring bank, they take the onus of settling the funds to the merchant as a batch. So even for UPI, they do it the next day. However, your point is valid that if the merchant has a specific ask, again, TPAPs have a certain flexibility to kind of, transfer it the same day at a certain cost. Like for example, today, a lot of Paytm small merchants also, you can see in the app, they have the ability to transfer the funds out the same day. Right, even and that facility is there, and small merchants, I think, depends on whether the TPAP wants to bear the cost or waive it off. The practice is widespread, but for enterprise merchants, even for UPI, it's T+1.
But
Because
why is that?
Because only P2P happens instantaneously.
Okay.
Right, like so P2P, what happens, because it goes from the issuer PSP bank to the acquirer PSP bank, PSP being payment service provider, it happens instantaneously. In a P2M transaction, there is a nodal account sitting with the acquirer bank. So they kind of do this batch, where they kind of let funds come in through the day and then settle it to the next day.
Got it.
Yeah.
So I think, look,
That's one reason. One more reason is what also acquirer banks do. Typically, if it's the same acquirer which is for both UPI and cards, they would kind of combine it and send it to the merchant. So the merchant gets one recon report at the next day, right? Like so, in one report, he sees that कल मेरा इतना UPI हुआ था, इतना cards हुआ था, इतना debit cards हुआ था. So and
But trust me, as a merchant, I
हाँ.
am more interested in getting my money first,
Yes.
and then think of recon issues.
Yeah.
Recon issues solution cannot be a reason for me to actually get some delay in my payments.
Correct.
But I understand
Huh.
how the entire setup is offered to them. I was just thinking, has this evolved
Yeah.
in the favor of the merchant over the last 10 years?
Got it.
And what you're saying is, at least from a card transaction point of view, it has still not moved.
And
At least UPI, it has.
UPI, yeah, to some extent it has moved, but a large portion of the enterprise still happens T+1. And T+1 is the commitment that the merchants have as well. So,
Cool.
So only for the small merchants who again are taking P2M, they have the ability to take instant payments. But for the large enterprise, even medium and small, large enterprise merchants, right? Typically, like say the supermarket example I gave you, they would get it next day.
No, fair enough. So let's just go a small, a bit more deep into this, and let's of the different actors of person, merchant, different acquiring banks and all, and networks. We should get to networks, but first, just focusing on merchants. Look, there are different, and this is my experience. Correct me if I'm wrong.
Yeah.
There are different instruments which lead to different MDRs.
Yes.
And just trying to understand it, since you head that business and you have so much experience.
Yeah.
How has that changed? How does that get calculated? Just to understand from a business point of view, that if there is a merchant who is probably selling a mobile phone vis-a-vis, say, somebody who's selling a water bottle.
Yeah.
The expectation is that the MDRs will differ.
Correct.
Even if the instrument is same.
Yeah.
So if imagine there is a person A who comes to use their same credit card to buy the water bottle vis-a-vis a mobile phone.
Yeah.
Assuming the mobile phone MDR will be higher.
Yes.
And even if there are two different people who are coming and buying, both of them buying the mobile phone, if they're using separate instruments, the MDRs might change.
Correct.
And if MDRs change, thus the interchange change, everything. Because what we used to say is everybody in the ecosystem of financial services and a payment gets fed because the merchant is ready to make you a payment.
Correct.
If merchant is not paying, nobody gets any money.
Yes.
So everything comes down to MDR. And that's my question.
Yeah.
How has MDR evolved? How does different businesses and ecosystems affect MDR?
Yeah.
And if there are merchants who are interested in accepting more and more digital payments, because look, again, digital payment is still a very tier 1-2 phenomena. How can adoption for lower tier, lower ticket size transactions on digital payments can happen better?
Sure, I think that's a great question, right? Like, because today actually if you see, there is a plethora of industries, right? Like what has been defined is that every industry category carries a certain merchant category code, what is defined as MCC. So intuitively, for example, and what does it depend on? It depends on the perceived risk of that category is one. So for example, like typically educational institutions, hospitals, etc. Get lower MDRs than, let's say, an e-commerce firm or a gaming firm, etc. Right? Like, so that is, so the category defines the MDRs. That is one. Second,
no. So if I can just ask this specific thing, you said every industry has a defined MDR.
Yes.
Some
defined MCC.
MCC.
Yeah, the MDR is determined by through a combination of factors. There is no defined MDR.
So MCC is just a way of identifying what type of merchant they are.
Yes.
But look, I think this is also true that somebody who is a education institute will have to bear a lower MDR vis-a-vis, say, somebody who's selling liquor, for example.
Correct.
Why is that the case?
Got it. So there is a innate risk perception which banks have, and this again, thanks to whatever decades of data that they have had, they attribute a certain risk perception to certain categories, right? Like, so one is risk perception based on which category. Second, even in the same category, for example, a larger player would command a lower MDR, right? Like, because I mean, it's kind of like, you know, they're larger, so the chances of defaulting is lesser, etc., etc. And even within that, like, you know, so for example, there is a difference between what we call a card present transaction and a card not present transaction. So the same merchant, let's say the merchant has a brick and mortar store, right? You know, where one goes to swipe the card. That's called a card present transaction. The MDR is typically lower than, let's say, if the same merchant had a online storefront, right? And if one were to use the same card there, because it's a card not present transaction, the costs are a little higher, so the MDR also is higher, right? Like, so it depends on that. So I think the MDRs really are a function of multiple things. Having said that, what has really happened is that the MDRs have become also an important play for banks to take share. So a lot of, for example, banks try to cross subsidize, right? Like saying that, okay, I will give you, when I say banks, acquiring banks, right? So I will give you lower MDRs on card, right? If you keep so much deposits with me, right? Like, so
They just
yes.
giving you other avenues for them to make money.
Exactly, right? Like, so banks look at it as a portfolio, right? Like, so they give, like, we have seen merchants with sub 0.5% MDRs, right? Which were not the case 10 years back. It's just because it's gotten so aggressive. Banks want that pool, and like I said, even the acquiring, there is an escrow pool, right? Like, so the higher the pool there, banks make money on the float, right? So it is not only the CASA which they get from the merchant, but this float carries that is weighted. So the larger the accounts, right? Like, banks are willing to undercut that 5 bips, 10 bips to kind of get
But Vijay,
that.
tell me one thing. Look,
Yeah.
most companies are not large companies.
Right.
Most merchants are not large merchants who can keep a large sum of cash
Yes.
blocked into somebody's account. Most companies in
Yeah.
India and even outside India would struggle to just keep the ends meet. Their money essentially is generally used to run the operations. Let aside the profitability and all
Sure.
that. So the ability, the number or percentage of companies who can actually block money will be very, very limited.
Yeah.
Most companies, most merchants can't do that.
Yeah.
Are you then saying that they will always be charged higher MDR and it's
Yeah.
a social financial evil they will have to live with?
Yeah, so I'll tell you. So there are three, if you were to tier the merchants, right? And that's a good way of looking at this space, since you're coming to, like, who gets what. So there are these, you can say 40, 50 million odd small merchants, right? You can say on an average, the turnover would be less than 20 lakhs a year.
The micro enterprise.
Yes, micro slash small. So that's the kind of it. Then you go like one step higher. Then there are merchants, who would, let's say, traverse the 20 lakh to say 5 crore kind of mark. Let's say, so the medium kind of ones, like the medium enterprises.
You're talking about the
Annual turnover,
Annual
turnover of these merchants, right? So the 20 lakh to 5 crore annually. Then you have the 5 crore plus, right? Like, so the kind of what we call as enterprise kind of merchants.
Right.
So what happens, and thanks to all that has played out, the micro and SME merchants have largely become UPI plays now, right? Like, so the card plays are still very limited. Like, it is in largely, like, certain categories, largely a tier 1, tier 2 thing, like you rightly said, etc. A large portion of that has moved to UPI, right? Obviously, zero cost, very easy, instant, payment receipts for most cases. And customer convenience, right? Like, the customer adoption has also played a huge factor. So, like, if you rewind even 5 years back, the customer adoption was not great. To just give you some stats, right? 2018, in a year we were doing 1 billion transactions. Last month, right? Like, last month, if you
On
kind of
UPI.
take on UPI, if you want to take last month and if you take the year-to-year data in 12 months, we did close to 15 billion transactions.
Month.
15 billion, no,
over
put together.
a year.
So we have grown 15x.
So the trailing 12
Trailing
months.
12 months went from 1 billion to 15 billion, right? That's the kind of, growth, that is kind of happening, and that's amazing. So what has happened, this micro SME merchants have really benefited from that, right? Like, which is why there the profit pools have actually not been MDRs, they have been your sound boxes, like devices which
Right.
merchants are willing to pay for, because it gives them benefits like, I'm able to hear the sound, I get instant confirmation, I don't have to worry about whether I've got the payment or not, etc., etc. So the merchants are willing to pay for that, right? There are today.
Okay, so you're saying
Yeah.
that the micro and small merchants are
Yeah.
essentially like the banks, and the payment ecosystem is not making money, which is based on a transactional relationship,
Yeah.
but more on the value-added services like the soundbox,
Yes.
which you hear,
Yes.
where they charge a monthly
Rental.
or they
Yeah.
buy upfront.
Correct.
Where say some sort of a service fee is charged to them.
Yes.
I think generally that's in the range of 200-300 rupees per month is what they do.
Yeah. Even there, it is kind
It
of
is
been
coming down.
coming down, but yes, the market has really opened up.
Makes sense,
like
makes
even
sense.
banks have started putting out sound boxes, etc., etc.
Makes sense.
Yeah, so that has happened. So then if you take the next tier, like the mid-size, mid-market kind of merchants and the enterprise, it's been a mix of cards and the UPI play, right? So the mid-market merchants have always had some POS devices, and there also they have only seen declining MDRs, right? Like because there are a lot more banks and players, who are wanting to give them lower rates. Like initially, like if you just take the offline POS ecosystem, there were banks. If you rewind 10-15 years back, there
Yeah,
were
yeah, yeah.
banks. Then you had players like Pine Labs, MSwipe, EasyTap, and all coming in and trying to take the market. And now then you had Paytm launching its POS, and then
Right.
PhonePe has its POS. So everybody has come into the market, right? Like so the more the supply, it's only meant that rates have been declining because the merchant pool is pretty much the same. Of course, their business would have expanded, but the merchant pools it's not that they have grown by a factor of 10x,
Absolutely
right?
not.
Yeah, so what has happened is thanks to that increasing competition, the rates have dropped there, and that is true for both mid and the enterprise segment. So that has been a phenomenon which we
So
have seen.
enterprise, though, I definitely agree. Look,
Yeah.
enterprise anyway will
Ah.
benefit from a fact that they have such scale in terms of GMV that what you started to explain with will anyway get passed on to them as a benefit. That you have so much cash to engage
Yeah.
with your bank that they will give you that benefit. But I think this mixture on the two aspects, the two different segments you spoke about, the 50 to 60 million
Yeah.
less than 20 lakh turnover merchants, and
Yeah.
how UPI has become very, very big there.
Correct.
And 20 lakhs to say 5 crores kind of a
Yes.
turnover where it's a
Yeah.
mix.
Correct.
But while you were speaking, I was also thinking, given that we're thinking and speaking about India context, why do people still use a mix or a merchant point of view? Let's just stick to merchant's
Yeah.
point of view. Why do merchants still see that there's a mix of credit card and UPI, given that credit card also from a mota monthly level, the payment expectation per
Yeah.
card in India is
Yeah.
nothing more than 15,000.
Correct.
And UPI on a per transaction level has been going up.
Yes.
If you remember, there were days where UPI had just launched. While you were speaking about the entire yearly number was 1 billion. Now we have gone 15x. Not that per transaction average transaction value has gone up that
Yeah.
way,
Yeah.
but India average transaction value will anyway not be very high. And given that credit cards general average outstanding is 15-20,000 on the higher side,
Yeah.
your limits on UPI is anyway reaching there, or it is much higher in most cases. Why are people not using UPI to make a payment
Got it.
rather than using, say, credit card to make a payment?
Yeah.
One obviously is the fact that your sense of not making a payment right now
Yes.
and probably after some time is there.
Yeah.
But is that still so predominant?
Yeah.
Or are there other reasons why
Got it.
there is a mix and people are still not adopting UPI predominantly as a payment of transaction payment?
So you're absolutely right that today, statistics wise also, 45% of UPI transactions are less than 200 rupees in India.
Absolutely.
That was why UPI Lite also launched, because people realized that you need a wallet like feature in UPI to kind of handle that. So that's one. So
Right.
you're absolutely right on the data point. What has happened in cards is like, see, and if you think about it, cards has been an ecosystem which has been there, right? Yes, today if you say around roughly annually $200 billion payments happens on cards, and that's almost equally split as 110 billion being on credit, 90 billion on debit. Today UPI is at 250 billion. So UPI is almost 2.5 times that of credit cards. But the $110 billion is spent by a population of 100 million cards, right? So those are
and that too is 50 million users, by the way.
yeah, exactly, right? Like so what happens? The propensity for the user, so the customer value is very high. That's a simple point I'm trying to make. Like so the user who's coming in, one has a higher AOV, right? And we have also seen that, right? Like any credit instrument definitely has a psychological nudge of bumping up the transaction value, right? Because you intuitively feel that I'm not paying for this right now, I'm paying for a
That's
data,
true.
so I can afford more. We have seen that, right? Like so that happens, and like say a 5 crore annual turnover merchant, right, might be typically like a single shop or a couple of shops, like a very modern trade outlet, etc., for whom cards would be important, right? So while yes, even he or she would have seen that the UPI mix has gone up and he would be happy with that. But I think we are not yet come to a place where cards will like disappear, right? And even data is not showing that. Like today we have 100 million cards. In 3 years, the cards are going to be 180 million, right? Thanks to a lot of co-branded cards that are coming into the market. Thanks to a lot of neo cards that are coming into the market. Now, what are neo cards? Neo cards are the ones that are targeting the users who are new to credit, right? And because again, that's the beauty, right? You have so many alternate data points now on the user for people to issue cards. So the card population.
But do you see,
Yeah.
sorry, I'm just
Yeah.
completing your point.
Yes.
Would you see, look, why, there is a reason why somebody is NTC.
Yes.
Look, everybody needs credit. Everybody wants credit. People who don't want credit are also getting credit.
Yes.
People who need credit sometimes don't get credit. My point is, do you see a lot of successful co-brand NTC new neo cards coming up, predominantly from large UPI, PSP, TPAPs, as we say it, because they have a lot of transactional history about somebody, or will there be just the DSA led
Right.
slash
Yeah.
distribution led co-brand services which will come up?
Got it. And that's a great question, right? And I'll give you some data to illustrate that. So in this 100 million going to 180 million, what we are definitely seeing in that in this 80 million, the additional that's coming, almost 40% is coming from your what we are calling as the co-brand card led issuance. Now, co-brand card led issuance typically works out of the distribution of the partner. So, for example, in our case at Amazon Pay, so we launched what today is India's largest successful co-brand partnership with a bank, with ICICI Bank.
ICICI Amazon.
Yes, yes.
I am a user.
Yes, right. Like, so we crossed 6 million cards recently, and it's very successful because, like you rightly said, it feeds on transaction data, which kind of becomes the upper funnel, and then of course while the bank takes the call on to in terms of whether the customer is actually worthy of getting the card, but there is transaction data to go back to, right? Saying that okay, has this customer been transacting, and this transaction data is not at a minute level, it's at an aggregate level, right?
No, so that is fair. Look,
Yeah.
Vijay, what I'm trying to get to is also,
Yeah.
while I will just,
Yes.
I understand what you're saying.
Huh.
My question was, large e-commerce players have anyway proved it.
Yes.
You will continue to improve this number from a 6 million issued cards to probably 10, 12, probably get to 20 million also.
Correct.
Which will make you probably the top 3 issuers in the country. All I'm trying to get to is who will be the new set of customers and where will the new set of customers come from?
Yeah.
Will that be outside of
Yeah.
e-commerce players? Will those be coming out of UPI ecosystem evolving a consumer who was just a UPI user and they don't have credit? Will
Yeah.
they then become an NTC transitioning to a credit card customer?
Got
And
it.
thus my thought was, will the UPI apps become the biggest supplier of NTC led credit card issuers in the country?
Got it. Today, to your question, Sid, that is happening on the merchant ecosystem.
Okay.
Right, because at the merchant side, because the TPAPs have so much merchant data saying that every month, how is historically the growth for this merchant has been. So to extend credit to the merchant, and this could be in terms of cards, in terms of lines, etc. This data is being used. I know several TPAPs, who are in this, even, we are at it in terms of, how you can use this. On the customer side, that has not started happening at a large scale. It's happening in pockets. People are trying to see what is the data that I can aggregate from a user's UPI transaction history to see if he or she could be credit eligible, but we are getting there. We are not there yet. And that's also because today the data is very dispersed, right? Like, so if you think about it, yes, while the user might use a single TPAP or a couple of TPAPs, but the transactions are very dispersed across a variety of use cases. Right, like, so it becomes difficult to judge credit behavior from that, but alternate data points are emerging. Like, now, for example, one thing we spoke about was co-branded card by e-commerce players, but if you look at today a Make My Trip or a Policy Bazaar or a Bajaj, right, who have their customers Now they are getting the confidence to go issue cards to those customers. It's saying that okay, now what can I do for them, and the limits and everybody is looking to play it intelligently. Let's start with low limits, observe behavior, then increase. Similar to how even BNPL players did it, like a simple or a lazy pay started by very low limits, right? Like 1,000 rupees.
Yeah, even
and
your
so on.
Paisa Bazaar
Yeah, card.
FD backed card is also
Yeah,
very,
exactly.
very low limit.
Correct. Yes, it's a very low limit. And by the way, that's a secured card. Like like if you talk even unsecured cards, people are getting the confidence to be able to issue it. And I think again here a lot of things have come together. Right? There have been fintech friendly banks which have been willing to partner and see the advantage of the distribution that a fintech can bring in. Let's say if you take the like of an RBL bank or a federal bank. Yes Bank of course has always been there, but I think in recent times they've become more prudent. But like these banks and so on, AU Bank for that matter, they've all realized the power that this synergy can bring in. Right? As a bank, I have the controls, the mechanisms. It's still my underwriting, my governance around it. But the fintech brings in the distribution, right? So so then it makes sense for me to partner, right? So I think that's the kind of thing that's driving the card adoption as well.
Cool. Got it. So this brings me to another point. Look, we've been speaking about how merchants are thinking about it and how, as a payer, I'm thinking about as a consumer. But look, it brings me to a question of two things. One is obviously from a consumer point of view, there is an issuer bank who's issued the instrument for the person to make a payment from. And the merchant who's receiving the payment, the transaction which is coming, you need a help of a bank which will acquire the transaction for you, and thus the acquiring bank.
Yeah.
I always wonder, and this probably you've seen in last 10, 20 years.
Yeah.
If there are a lot of acquiring bank and a push on the acquiring side, does that help get a lot of payments digitized or the adoption of digital payments? Or does a lot of issuing bank number of issuers coming live give access to a lot of digital payments?
Yeah.
Like it feels like a chicken and egg problem.
Yeah.
You can have thesis around it, but what have you seen in the last 10 odd years? Is it issuing resulting more into acquiring, or acquiring then resulting into more issuing?
Got it. So we have clearly seen that issuing has resulted into more acquiring. And I'll tell you why. So first is in terms of data itself, right? Like today, if you have, today, like I said, we are close to around 100 million cards which have been issued historically till date. That same number up until 2019-20 was around 30-35 million. Right? Like so the issuance has grown tremendously. Okay? Thanks to multiple reasons. I think the number of people who are eligible to be issued has increased, purchasing power has increased, discretionary spends have increased, co-brand cards have increased. All of that, right, has led to that. What has interestingly happened on the acquiring side is that a lot of consolidation has happened. So if you see the top four, right, like between HDFC, ICICI, SBI and Axis, they process close to around 80% of the acquiring today. Right?
True.
Yes, right. So what has happened? So there, and because acquiring again is a lot of things that need to be in place, right? Like I need switches, I need processors, I need I need to kind of have the merchant relationships, etc., which HDFC and ICICI took a very early lead on.
But Vijay, tell me one thing. Also on the issuing side, also the same four banks account for 80% of all issued cards.
Correct.
So it's the same thing. That's the confusion I keep having.
So on the issuing side, yes, that HDFC and ICICI, I think if I were to
If
place a number,
if you combine HDFC,
ICICI and SBI,
SBI and Axis also now,
right?
Trust me, all of these four combined would do 80% or just above. So it just feels, has this 80% resulted in the 80% of acquiring, or this 80% is related to 80% of issuing? That's the question.
Yeah, see, it's incidental that the banks have been the same. However, on the issuance side, if you take the last few years, the new issuances, right, have all been by these fintech friendly banks that I've been telling you about.
That is
you
true.
look at a federal, like in between, SBM was doing a lot of issuances until RBI put the brakes on them. You look at a AU bank, you RBL bank. So these have been the new age fintech friendly issuing banks, right? Like so, and that they have continued to kind of drive the adoption, but that has not happened on the acquiring side. Acquiring side has still continued to be these four, who have kind of, been, yes, little bit Kotak, etc., but these four who have continued to, because again, what happens, issuances, like I'm doing new issuances to new customers, right? Acquiring is typically long-term relationships. Like, and again, I'm talking of the Pareto where, see, if you look at, yes, you can talk about all three tiers, but from a credit card standpoint, the 80% of the money comes on the enterprise side, right? From in terms of value standpoint,
Absolutely.
and there it's deep relationships. Like, we were talking to several merchants where banks have 10, 15, 20-year relationships. So, and that doesn't change, right? So that's also one. Whereas from an issuance standpoint, like today, I know I can get a card from Federal, and today people are getting multiple cards as well, right? Like, so that, it's increasing in a way where people are getting more cards and more people are getting cards, and there are more issuers coming in. Whereas acquiring has kind of been a lot more stable.
So one of the things which I was also thinking while you were speaking, and I was about to make a note on that as well.
Mm.
You said that there is a lot of issuance which has happened. Unfortunately, to be honest, if you see a lot of these new issuing pools which have been created, a lot of these cards have been issued to the same set of users who were already using a card.
Yeah.
So somebody who's a new card user, who's a single carded customer, are very low.
Yeah.
A lot of multi-carded users are getting cards again. So although the number of cards may have improved from say 50 odd million to an 80, 85, 90 million by now.
Yeah.
But the actual unique number of users have not grown that much. However, when you were speaking about merchants and how merchants have been acquired 80, 85% by these larger companies, larger banks.
Yeah.
And since the merchant relationship is a long-term relationship,
Yeah.
that made me think a lot of new companies have now come up. You were also earlier speaking about the fact that you have now PhonePe as an acquiring participant. There is Paytm now doing that. Even Razorpay, Pine Lab, all of them.
Correct.
What makes a merchant move their relationship on the acquiring side of relationships, acquiring side of transaction?
Yeah.
Given that acquiring pricing has been coming down, and I'm sure their own banker might also be offering them some of the other aspects of the relationship and the pricing going down. Why does a merchant, in your experience and you've seen, move relationship from one partner bank to another?
Got it. So firstly, what has happened? So there is a cards acquiring, and then there is a UPI acquiring, right? So both these things are playing out in the market. So a merchant who has historically had a relationship with a bank for cards might or might not choose the same bank for the UPI acquiring, because typically for the UPI acquiring, any of these third-party application providers, TPAPs as we call them, like a PhonePe or a Google Pay, or even via Amazon Pay or Paytm for that matter, has gone to the merchant and said, I have a partnership with an acquiring bank, which could be different from what your cards acquiring bank is. That doesn't matter. You need an UPI play, right? Because it's an important instrument from an ecosystem standpoint. I will provide you the services of setting it up, doing the settlements, doing the recon, giving you dashboards, giving XYZ value-added services, etc. Right? So merchants have, in some sense, had also to kind of make another choice, thanks to this ecosystem flourishing, of saying, apart from my cards acquirer, now who is my UPI acquirer? Right? In some cases, merchants have stuck to the same bank. For example, we know a lot of the enterprise merchants who have stuck to the same acquiring bank, etc., like like a HDFC or an ICICI and so on. Merchants have also shifted to newer acquiring banks. My earlier point of rates getting competitive, so merchants also kind of look to see which rates do I go with, and there is an important play here in terms of the device, right? Which is where players like Pine Labs, or an M-Swipe or an Easy Tap or a Mosambee, and they have, or an Innovity for that matter, they have made great inroads into the merchant ecosystem by saying, okay, I will give the device. Yes, if you have a relationship, cards acquiring relationship with an existing bank, that's perfectly fine. I am a multi-acquiring payment platform, right? So I will give you this device, I will do the processing, I will work with whichever bank that you have a relationship with. By the way, if you want a fresh set of relationships, I have my partners as well. But I will manage it end to end for you on the offline side, right? Like, so that has evolved, over a period of time, and that's also evolved thanks to these lovely form factors today that you see on the Android POS machine, right? Like, you would remember the legacy POS machines where you could just swipe and that's it. But here now you see digital terminals where you're able to tap a card, you're able to see a QR and make a QR payment. And for the merchant, that even provides an ecosystem where he can see the transaction history, generate bills, all of that. So all of that has also evolved, right? So for a merchant now, it is about there are these multiple entities who are coming in the market, and Pine Labs, what it has actually done is, because banks didn't see, the device play is very operationally intensive. Right. So a lot of banks, while they were happy doing the back end acquiring and processing, the putting out devices, the like changing the paper rolls every month and attending to repairs, merchant servicing is a very operationally intensive game, which players like Pine Labs chose to play in depth. Right. So that's one reason why banks were willing to partner with Pine to be able to do that, while still retaining the acquiring relationship in lieu of a certain fee, etc., etc. The second thing is, players like Pine Labs also went deep into integrating with the merchant's billing POS.
True.
Right? So they said that, okay, now I will integrate with your billing POS so that it is seamless for you in terms of this invoice and this payment, what has happened. Banks didn't have the capacity to go merchant by merchant and integrate. Banks don't have that kind of a model where they do customized integrations merchant-wise.
I agree, and it's so ironical. Sometimes it's laughable that, look, at the end of the day, every fintech is trying to figure out some data point through which they can lend to the user who is engaging with them.
Correct.
While you were speaking about Pine Labs and you said, hey, they integrated with the POS provider. Predominantly, if I were that company, I would want to do that so that I can get a complete view of whatever payment transactions have happened, so that I can underwrite the merchant better.
Yeah.
Now, as soon as you get to a level where you start underwriting a merchant, bank starts having an issue that I don't want to be a back-end pipe. But when there was the time to actually do the heavy lifting, they were okay sitting back and just participating.
Yeah.
So I just find it ironical that can't you just see that everybody is trying to get to the lending pool.
Correct.
And if you were very clear in terms of your partnership to begin with, I think you'll, as a bank, you'll be much more aware of how people are trying to build this entire ecosystem.
And that's very true, especially for that mid-market segment I spoke about, right? Because even for the large enterprises, banks would have their usual financial statements and would do all that. The mid-market is the pool. You're bang on that.
Absolutely.
Yes.
So, okay. So one, obviously we've spoken about different aspects, and I think one of the most important stakeholders is still left, and I would want you to address that as well in the end. Look, we've been speaking predominantly on digital payments. Obviously, say if we go 20 years ago, you had RBI as the network, because they used to settle all transactions via check or all of that, predominantly check. Where you used to have inward, outward clearing, all of that.
Yes.
Now, a lot of which has shifted to digital payments. We spoke about UPI and cards. Cards could be a prepaid card, debit card, credit card, doesn't matter, but using the same sort of settlement.
Yeah.
Cards are essentially getting the services of networks like, Visa, MasterCard, American Express, RuPay now. And then UPI is predominantly just NPCI.
Correct.
RuPay is also an entity / an IP under NPCI, which is the overall partner network which is using this.
Correct.
How have you seen these networks play a very important role in ensuring the adoption of digital payments have happened? What are the broader business models these guys follow?
Yeah.
And will this change? Because I generally see how Visa used to make money, and I'm not saying Visa just to name them, but they're like the biggest.
Yes.
Look, if I am correct in my knowledge, 60-65% of all cards issued are Visa.
Yes.
Although RuPay is now picked up because of UPI adoption, all of that, we should speak about that.
Yeah.
Their business models, first of all, have not evolved or changed over time.
Correct.
Will they change? What are those? So if you could speak about networks.
Yeah. No, I think that's a great point. And what they have historically relied on is that for digital payments, cards, ecosystem, they are like an inevitable layer, right, which people have to traverse, right? Like, so without them, the transaction doesn't exist, and that's been their strength.
They're like the telecom partner to avail internet.
Exactly, right? Like, absolutely, right? So they are like the backbone in some sense, and so they were kind of, charging whatever, they were charging. What has also happened in that space as well is that it is the card network fee has been shrinking, right? Like even in the, because again MDR has been shrinking, so interchanges have been lesser, the card network fee has also been lesser, etc., etc. What they have of course benefited from is the volume uptick. Like even after all this, cards have grown at 30-35% CAGR over the last 10 plus years, right? Like so they've grown thanks to that, and also because it's like an oligopoly in some sense, right? Which is precisely what NPCI and I think even the larger with the blessings of RBI said that we need to address it, right? Because that's a significant component which is going out of the system. So how do we address it? So came up with this indigenous again network and so on. That it's also important to realize that they play the role of also not only a backbone but also a key component in success rates, right? Like because the strength of the processing is very much dependent also on the network, right? And even today the Visa Mastercard success rates for a comparable transaction, assuming ceteris paribus, right, like it's higher than RuPay. That's an established fact, right? Like because of the,
Even when we speak about RuPay, which has come up a long, long way.
yes,
I think 6 years ago it was really, really, or
correct,
5 years ago it was really, really
yeah,
abysmal.
yeah,
But yeah, they like if you're doing a transaction, the transaction should happen,
yes,
and that's what has been the right to win for Visa and Mastercard that way.
correct. Yeah. So RuPay has of course flourished, and I think it has driven a lot of adoption because of very friendly regulations to kind of empower it, right? Like for example, RuPay debit cards, MDRs being zero, etc., etc. So I think that has done a lot to kind of power it. RuPay credit cards as well, the MDRs are zero, etc. So that whole zero MDR regime, which was for UPI, kind of coming on RuPay has been something that the NPCI is trying to kind of drive. What has really happened there is that it has taken time, right? In the sense that while merchants have seen that the customer adoption was initially less, but now a lot of the new age credit card issuances have been on RuPay, right? Like so the new co-brand partnerships, if you've seen, have a lot been on RuPay, etc., etc. So that is.
So isn't that predominantly because only RuPay credit cards are live on UPI? Is that not the only reason? Because
So-
just before this
Yeah.
circular came out,
Yeah.
that look, UPI essentially is a
Yeah.
IP of and driven via NPCI.
Yeah.
RuPay is also part of NPCI, and thus they've done
Yeah.
or given early access to RuPay.
Correct.
Before this happened, the choice for a issuer
Yeah.
or a co-brand partner to come up with a program on credit cards, they always used to figure out, hey, should I go the MasterCard route or the Visa route?
Yeah.
Nobody used to think predominantly. I'm just making my assumptions about RuPay. Now RuPay has become very, very
Yeah.
clear favorite / rank one.
Correct.
Is that not predominantly because of the association of UPI and RuPay?
So two things have happened, right? Like so, firstly, RuPay adoption increased because the RuPay's share of the fee which the issuing bank had to pay to kind of RuPay was lesser than Visa and Mastercard, right? Like so so in the for a similar transaction, one would pay lesser fee to RuPay, and it was literally like half or 40% of what would otherwise have been paid to Visa, Mastercard. That is one. So one, commercials were very attractive. Second, there was this NPCI push as well, saying that okay, like for new age cards, take RuPay, which also helped that they got this thing saying that no RuPay cards can be linked to UPI, right? Like so, it was kind of things which kind of happened, you can say, in parallel, but the initial adoption was purely commercial driven, right? Because RuPay was charging much lower rates for banks to kind of partner with them.
No, but Vijay, I'll tell you why I'm
Yeah.
saying what I'm saying.
Mm.
You spoke about two things, obviously the transaction cost as
Yes.
well as the feature enablement
Yes.
on UPI.
Yes.
I think the transaction cost is still not a problem because
Yeah.
if you see the industry, and this is again my
Sure.
gut telling me that the amount of incentives which Visa and Mastercard can offer,
Right.
I don't know if NPCI can offer that much. Like
Yeah.
I've seen Visa, Mastercard, and I'm not trying to
Correct.
corner them. There are others like diners also, Diners generally
Yeah.
have a very sole partner
Correct.
program kind of a setup if you see them across.
Yes.
Even American Express, although American Express generally is a closed loopish setup where
Correct.
they are the issuer, they are the acquirer.
Correct.
The kind of money which you require for a new program to come up, the kind of cashbacks you want to offer, the kind of say airport lounge offers you want to, all of this comes with a price.
Yeah.
And generally, Visa and Mastercard generally have been very, very generous with their
Yeah.
grants on ensuring a program is picked
Correct.
up. And these guys on the RuPay side, they actually went the other way that, hey, if I can't offer money, can I offer them UPI? And
Yeah.
thus my point was,
Correct.
isn't UPI the major reason why people are coming up with a lot of RuPay credit cards?
So two things, right? Like, so I think the point that what Visa, Mastercard do to support the program is through their marketing spends. I think, you're bang
Absolutely.
on that. Right? So they spend enough marketing to make sure that the program is successful, which is why they continue to issue cards. But what has happened on the RuPay side is that thanks to one, favorable economics, second, the ability now, from a platform standpoint to be able to have my credit card linked to the UPI. And by the way, that is still happening as we speak, right? Like, so the all the user adoption and transactions which are happening and merchants willing to pay MDR. Like even today, less than 2K transactions, for RuPay cards on UPI is zero, right? So merchants are kind of increasingly finding that, okay, so less than 2K, I'm okay to live with. Greater than 2K, fine, let me start be willing to pay. That is what we are also seeing in the market. It's in nascent stages, right? Like, so you're right. So the jury is out. So let's say if 5 years later, right, if we were to kind of take a call, where would the market be, right? Like, would Visa and Master have significantly lost their share? I don't think so, right? What would have happened is, one, you're seeing the overall pie expanding, right? Second, RuPay definitely picking up steam, and the base is so low that it will have to grow, right? But like even today, for example, we are seeing that, for example, Visa, Master, like your Google Pay, which allows you a tap, like you can add the card and pay. I mean, today, you can do that on Google Pay for that matter, and that is something which those networks are also like, and issuing banks are also willing to give a portion of the fee for that as well. So we are seeing all of that play out as well. So a lot of tap and pay will also happen from the phone, right? It's not just cards. From the phone, tap and pay will happen. Again, led by Visa, Mastercard. Yes, it could take longer for Visa, Master to come on RuPay to come on credit on UPI rails. We still don't have a line of sight to that, right? But I think everything will coexist and grow is kind of what I'm sensing.
Cool, cool, cool. Before we move on to the last segment, I
Yeah.
think while you were speaking, one quick question I had.
Yeah.
Since you engage with merchants on an ongoing basis, does the form factor of how people are making a payment also define their choice of who do they want to partner with, the MDR, all of that? Like, if you go to, say, a more evolved economy
Yeah.
in terms of per capita GDP and all that,
Yeah.
I think digital payment wise, we are probably one of the most evolved ecosystems. So
Yeah.
I think not that side, but
Yeah.
say for example, if you go to say US or Australia or all of these places, you would see a lot of people using tap and pay a lot.
Yes.
You would see a lot of people using not just their mobile phone, but using their watches to make a payment.
Yeah.
Apple Watch is a big use, one of the biggest use case in the more evolved ecosystems.
Correct.
Is to make a payment.
Yeah.
But we don't see that in India at all right now. Although health as an idea has picked up really well in last 10 years, the amount of people you see with smartwatch
Yeah.
has gone up significantly.
Correct.
The ability of smartwatch because of technology has also gone up. I am assuming that you will start seeing more people using their watch or other form factors like ring to make a payment.
Correct.
I'm sure you've seen such
Yes.
use cases.
Yes.
Question one is, does the form factor of digital payment change the MDR or affect the MDR?
Yeah.
And secondly, will you see a exponential growth in these form factors?
So at least, so we were at a recent NPCI event, right? Like where we were looking at what is the thought process going behind these wearables, and these are essentially what you would call as embedded payments, right?
Yep.
Like, so you're having an additional layer, whether it is a watch, whether it is, I mean, let's say even if you can think about it like a car, like, you you tell your system to just recharge its fast tag, for example, automatically, or voice based payments, etc. Any of these are embedded payments. Interestingly, what has happened for India is that, because we have kind of in some sense took a shortcut to something which is very easy to use, intuitive, and even on that there are innovations happening, right? Like for example, you first had UPI, then you had UPI Lite, which was like you could do sub 200 transactions without without really changing anything, without having to show up on your bank transaction, etc., etc. Then you had UPI Lite X, which is now meant for like even no internet payments, right? So where you could make the payment in a completely no internet scenario. And then you had like UPI 123, where even on a feature phone you could make UPI payments. So there has been a series of product innovations that are happening and continuing to happen. Like so for example, I'll tell you something about what we are now talking about, contextual payments. So today, yes, we are all used to seeing a QR, scanning a QR and making a payment. But what if, right, the QR and what you see on your phone is customized to the merchant, you as a customer, and the use case, right? So for example, if you are at a place where, let's say you're at an electronics store, right, where the value is high, you scan and you don't get your typical UPI options, you get EMI options,
Right.
right? Then it would be a lot more interesting and relevant and value additive to me as a customer, right? And today it's very easy to embed all of that in what we call the checkout page, right, or the PSP page. So that's possible. Think about, like, let's say you are in an airport lounge, right? What you see is that you see only credit card options with a 1 rupee or 2 rupee, because that's what you typically use to kind of swipe there, right? Like at a lounge,
The entry fee.
the entry fee, right, that shows up immediately, right? It's not like a bunch of laundry list of instruments that are showing up, but it shows what is relevant to you. Imagine you're at a fast food joint, like an offer on a burger kind of shows up saying that if you use this instrument you get 10 rupees off or 100 rupee off on this burger. So those are ways through which we can intelligently use contextual payments. Think of like a metro ride, right? Today you travel in a metro, you scan a QR and you're immediately buying a ticket, right? Like, so those, I think, are really things which are relevant for the Indian ecosystem, right? Like, so while yes, variables and so on will be limited to a certain set of people who could first afford them, second use it, a lot of it's for the fancy value, right? Like, I mean, like, that what you can do with your watch you can also do with your phone, but a lot of these would be relevant to a much larger set of people, right? Like, because
So I'm getting a sense from you
Yeah.
that essentially mobile
Yeah.
will still play
yes,
the predominant
Yeah.
form factor to make a payment.
Yes.
Because you still have tap and go still happens from a credit card itself.
yes,
That credit card ecosystem slash the entire payment layer will then shift into mobile.
yes,
But moving from mobile to others, probably that adoption does not require
correct,
like the delta which is created via say variables is
Yeah.
not as much, and people might still stick to their mobile phones.
correct,
Makes sense, fair. Look, I think we've spoken in depth about P2M. We
Yeah.
spoke about various actors who are ensuring the magic of tapping a card and the transaction happening.
Yeah.
How everybody is getting impacted. I think we spoke about it, how the ecosystem is evolving, and given that you've spent so much time in the financial payment ecosystem, one of the questions I keep asking people who I get a chance to speak to, and thankfully, first of all, thanks a lot for coming on the show.
Pleasure.
Speaking to us and explaining so patiently about these things. How should somebody who is young uh, compound fast to understand all of those things? I'll tell you why I'm asking this also. A lot of times when people enter either banking or within banking also shift to another department of banking, and banking is one of the big employers in the country.
Correct.
And I'm not just thinking about a bank, but NBFCs, fintechs, all of those.
Yes.
One of the biggest challenge for people is to understand what's allowed, what's not allowed, because
Yeah.
that's the regulation part.
Correct.
How do people learn about such things
Yeah.
at a faster rate? vis-a-vis just spend a lot of time and just doing things and be very slow in compounding.
Right.
So my question to you is, if
Yeah.
somebody wants to understand a lot more about digital payments
Yeah.
or payments at large, irrespective of P side, M side,
Correct.
network side, anything which is
Yeah.
of interest to them, how can they compound faster, in your opinion?
Yeah, I think for someone who starts in any part of the payments ecosystem, right? And like you said, there are so many different parts one could start from. It could be a bank, an NBFC, a card network, a fintech, whatever, right? Like, so you could start anywhere. But what is very important is, what we call in Amazon as a principle, as to be have the ability to kind of learn and be curious, right? Like, I think that hat consistently on a regular basis, right? To kind of just one, have that thing that I need to learn. Second, to be curious. So because a lot of answers come when people, even if they know something, I think have the ability and the thought process to be willing to go deeper, right? And going deeper happens when you ask the why, and it's not just the first why. Like we say, you need to go to 5 whys, at least, to kind of get to some level of depth on something, right? So I think one is, I think it's a character slash behavioral slash temperament thing, where this is very important, especially in a financial ecosystem. And it is, and again, for someone who's starting out, this is not the easiest of ecosystems, right? Like you look at many other ecosystems like a FMCG or a retail, or any of the other non-financial services ecosystem, they are still relatively simpler, right? Because a few years and then you are in it. Here, the complexity is high, right? Like because there are different players, there is interconnectedness, right? And in some ways, like if you have heard of this Russian Matryoshka dolls, right? Like it's payment systems within payment systems within payment systems, right? Like so, for example, you have payment aggregators, who work with other payment aggregators, who might work with other acquiring banks. So there is a lot of nestedness in this,
Right.
and that is not evident first up. You might see a block diagram and think, oh, this is what it is. But when you get in, you actually realize it's a lot deeper, right? Like those blocks have sub blocks and sub blocks and sub blocks. So, and that only when you have this appetite to learn, you will start figuring out over a period of time.
But that's fair. But
Yeah.
let me try and make my question more focused. My point is,
Yeah.
I think how you're telling me is a very good way of approaching if I am interested. But let me flip that. Say,
Sure.
for example, there's a young person who joins your team,
Right.
or somebody like you,
Yeah.
who's a senior person who's leading a P&L role
Yeah.
in one of these ecosystems.
Yeah.
How do you make them
Yeah.
compound faster?
Yes.
What would you tell them? Hey, do these 5 things,
Yeah.
which will make you quickly learn what I or the ecosystem will demand of.
There are two parts to that, right? Like there is a domain part to it, there is a functional part to it.
Okay.
To me, the key thing is to be able to give that person an exposure to different parts of the domain over a period of time, right?
Okay.
Like so, let's say, and you could do it. I mean, if you visualize a matrix, right? Like so, imagine that different domains are like the rows in the matrix, right? So let's say it could be with merchants, it could be with customers, say customer use cases, merchant use cases. Let's say it could be interfacing with partners, etc., like as kind of different different rows in that. The functional skill sets could be from a sales standpoint, from a marketing standpoint, from an ops standpoint, etc. And the one of the key things that I have realized, and again having led many teams over many years, is that what excites people is the ability to kind of pick up something, learn, and then also move to something which which either they want to kind of learn, pick up because they see it interesting from a distance, or something that's absolutely new to them, and that depends on the individual. And that I've seen over a period of time, like, and I've seen people who in my team have spent like 10 years plus, but they have done literally, they would have done 7 different roles in those 10 years. That keeps the excitement going, right? Then what happens, you get the ability to connect the dots, right? Like because then you see that you see a certain patterns emerging, which you kind of try to decode it in your mind, and then you feel a lot more comfortable. That happens, right? Like so the exposure, and I'm not necessarily saying the exposure has to happen within one company. some companies have the wherewithal and the spread to do that. But if the person has avenues, he should move to different parts of the ecosystem if need be with different companies and be willing to kind of take those jumps, right? To kind of to be able to learn, expand, and like I said, the dimensions are both from a functional standpoint as well as from a use case or a domain standpoint. Like so much opportunity exists.
So you're essentially saying that one of the ways of faster / compounding fast is to either have experiences very quickly in various aspects of the organization or the department.
Yes.
Or probably the same thing done across different organizations and industry.
Correct.
And that will give you different perspective of various things, so that say over a period of 5-10 years you are far more equipped to connect different dots, which you'll be able to see.
Yes.
Makes sense.
Yeah, because we have also seen it, right? Like, so we see partners up close, like partners whom we work with, and we sometimes have people join us from those partners, and we see that there is a different worldview that exists. Like when people come in and then they so there is a better appreciation on both sides, and that gets richer, like with different partners, and because the way payments has expanded, I mean, in some sense, while like I said, going back to us becoming at a macro level a superpower, so many things have flourished, right? Like you now have people who have been able to do so many different things, right, over a period of their career, and thankfully I've been fortunate to have been part of multiple portions of that, starting with my digital wallet piece, to kind of leading a neobank, to kind of leading a complete merchant ecosystem across a bunch of products. You've been fortunate, and I'm grateful that the ecosystem has allowed you to do that, right? Like if it's been let's say any other country, with a much smaller ecosystem, etc., the ability to learn and expand also would have been limited. But we have been in an economy, in a phase of the country, let's say over the last 20 years, where so much has grown, right? Like, so this is very grateful for that.
Awesome. I think, look, whatever I had in mind, we did cover that. I began this entire discussion with a view that we'll figure out things around payments. Because look, I think as I spoke in the beginning also, a lot of people generally have a very personal view of payments. They have a very first person view of payments.
Yeah.
And a lot of times, most people who we know are on the payer side and not the receiving side.
Right.
So first of all, thanks for letting us understand that in depth and detail again. And I'm really grateful that we spoke about all of that in depth. And hopefully you enjoyed our conversation.
Absolutely. I think it's been a pleasure to just kind of look at it, engage in this very deep and insightful conversation with you. And I think I've really enjoyed the way you've kind of been able to dissect different parts and kind of go with the flow. I've really enjoyed that.
I think look, it also comes back to the fact that I've spent so much. I've also spent 2 odd decades in financial services.
Yeah.
When two people who use the same language speak, then obviously they're able to relate to each other much better. But hopefully, I could sense that we were using some jargons which we would have tried to explain during the episode.
Sure.
But I really enjoyed it. Cool. Look, I think any other final questions if you have for me, happy to answer them. But I am quite done, and I'm happy that this came out so well.
Yeah, no, I think very, very satisfied. I think very thanks to you and thanks to the entire team for putting this together. So
awesome.
We're very happy.
Thanks a lot.
Thanks, Sid.
Thanks for watching the video. If you liked the video, please press the like button, subscribe if you like it, and if you can share it with your friends, I'll be really happy about it. We are working really hard to make good videos, and hopefully future videos will be as exciting as the one you just saw. Thank you.